Hello everybody, it is David Dustmann with Movement Mortgage, and today I'm going to be talking about this right here, and that is renovation loans. So I'm going to put this up here so we can get started. All right, so Movement Mortgage, as you can see, we're a unique company, a little bit different in the way we do things, but also different in the type of business that we do. So one of the things that we really love and enjoy doing here at Movement Mortgage is renovation loans. And as you know, in the industry, not a lot of people out waving the renovation flag, but we certainly want to make sure that our realtor partners have all the products available to them, including these guys right here, the renovation loan. So what we're going to try to do today is we're going to try to go through and cover a few basic questions so you have a good understanding of what the renovation loan process looks like, who might qualify for it, when you might use it. So here's some things that we're going to try to address. Of course, you want to make sure that you know how it works, why you need to know about them, who can they help. Remember, they can help buyers, but they can also help sellers as well. And then, of course, what are your options? And then why Movement Mortgage? Now, I say why Movement Mortgage because Movement Mortgage, we're a little bit different than most other lenders when it comes to renovation loans. So let's just talk about really renovations, right? So how did this all get started? Years ago, we used to see all these great TV shows. They were just coming out. People were fixing up their houses, and everybody was having a great time. This is one of the originators. This is my favorite one. I always ask people, who can you name? They only name one. This is the only guy they remember. So, kind of fun. Now, today, things have changed a little bit. Now we have this show here, Fixer Upper. I love Fixer Upper because it's a little bit more grounded in reality. It really shows the whole process from beginning to search for a home all the way through the renovation process and completion is what we call the celebration, right? We celebrate at the end, and that's what everybody wants. As a real estate professional, a lot of times you might have someone that might say, hey, just making a few small repairs. I'm not quite ready to have you come out and look. And you push and push and push and say, hey, let me come look at the property and kind of see where things are at. You have a cup of coffee, and when you get there, you find something like this. Now, this property as a listing is definitely going to need a renovation flyer out. And this is one of my favorite things right here. If you have a property like this right there, you're probably going to want to put one of these out here with our renovation brochure. And then you may even want to put some flyers out there to explain the renovation process so people know that we can fix this issue. A lot of realtors, they work a FSBO list, and you may be calling on FSBOs, and you'll find yourself calling, and you decide, why don't I just go drive by? Let me go and take a look at this FSBO and see what it looks like. Why has it been on the market for 180 days? And then when you drive by, you see something like this. Well, this is going to be a very difficult property for an individual to sell. This will even be a difficult property for a real estate agent to sell. Obviously, it has some need for some improvements. Now, what I like is that these little signs here actually come with a stake. So we can stake one of these in the ground so people know when they drive by a property like this, renovation financing available. Because as we can see in this picture, it's definitely going to be needed. Now, most people right now are watching Flip and Flop and all these other things, and they're realizing that there's some great deals to be made in the bank foreclosure market. So when people see these type of signs out there that say auction, bank owned, things like that, they're anticipating a good deal. Now, the drawback to that is that normally these properties are going to have a lot of deferred maintenance. That means maintenance that has been kicked down the road, right? So we're kicking the can of maintenance down the road, typically because they find themselves in a position where they're struggling to make the payment and they cannot maintain the property. So when they do go through foreclosure and they come onto the market, they usually have a lot of deferred maintenance. And so those things, again, another great solution for that is the renovation loan. So let's remember that this program offers solutions for buyers and sellers. Now, I know, hold on, everybody's friend, And you've got to remember, as real estate professionals and myself as a lender, we have to be real in understanding that people are going to be starting their own searches. Right? It used to be that they would come to us first to get pre-qualified, or they'd go to you to ask about properties as a realtor, but now these things have changed. And we find that there are resources out there where they can do a lot of their own research. So you'll find them looking for these special bargain deals, and what they find is they're very difficult to finance. So with that, we want to be able to make sure that you as a real estate professional have that tool in your tool belt that you can say, hold on, if you want that, we have a solution for you. And that's a renovation loan, hopefully through Movement Mortgage. Now, what happens with these foreclosures, and this is why these properties become so dilapidated. A lot of times you'll hear the term dilapidated, which when you drive by, you'll see things hanging off them. You know, the roof shingles up, the grass has grown up, all these things that are happening to them, because if they happen to go into the foreclosure process because of obviously non-payment or default on the mortgage, it takes a very long time to foreclose on a property. And if it's vacant, nobody's maintaining it, and you'll find that the property value will be going down. Of course, the neighbors love foreclosed properties in their neighborhood, but you'll find that as the properties become more dilapidated, they also become more attractive to certain people because now they're looking for a great deal. This one I put in there just for fun. This shows you actually who are some of the bigger foreclosure states and who has some of the highest foreclosure rates. Right now, as of 2017, New Jersey was the top state. Here in Oklahoma, Muskogee County was the big offender. You can see the map there. You don't want to be in the dark section. The dark section means that you have a lot of foreclosures. But the bigger issue other than foreclosures in a lot of markets is this one right here. And this is aging inventory. In Oklahoma, in our market here, we have one of two things. It feels like we have new construction or we have older existing construction. We're missing a lot of that stuff in between. And the stuff that's in between is actually really perfect for this program. Plus, when you get older, you can never fail with a renovation, especially if it hasn't been done yet. So aging inventory, depending on where you're at, is a huge problem. Now, somebody said to me one time, why up in the Northeast is there so much old inventory? Well, I think it's pretty self-explanatory. Where did they really start building houses first? Somewhere up there, right? That's where they started at. And then, of course, as you start coming, they get younger and younger. All right, so I'm going to go over these different programs, and we start talking about and I say 4 different programs. They're really an FHA. There's a couple different options with FHA. There's also the home style, and then we're going to talk about the VA. Sometimes you'll hear people say, there's 3, 4, 5 different programs. They're really not. There's really about 3 basic different ones. They each have a couple different avenues you can go down based on what your needs are. So we're going to go over this. Now, if you're sitting in one of my classes, you are going to get a folder that looks like this right here. And inside of that folder is going to be a place to put notes, of course, one of our renovation flyers. And you're also going to find this particular slide in there as well, which is a great reference tool. So you can find out where, what program might work for your particular client. So first thing that you have to understand, and we're going to be talking about the FHA first. So we'll notice that everything is going to be talking about the FHA program. As far as borrower eligibility, the same borrower that qualifies for any other FHA loan with us qualifies for this program as well. And I'm talking about, are they a U.S. citizen? Are they going to occupy the property? Things of that nature. All the same basic qualifications as FHA. So I will tell you that under all the HUD programs, it's going to be very important to understand that those are for owner-occupied, right? No investor property on those particular ones. So they're going to be buying it and living in it. The property types that can be done, of course, is any existing property. It must have had a certificate of occupancy issued. I get this question a lot. If it's under construction and something went badly, and somebody wants to buy it up, even though it may have gone through the foreclosure process and the bank got it back and it's only partially completed, can I do an FHA reno on it? And the answer to that is no, you cannot. But the good news is there might be other loan programs available for that type of property. But here, under this program, we cannot do that. You can do a 1 to 4 units. Now, what we have to remember with that is that even though it's 1 to 4 units, so it could be a single property, it could be a duplex, a triplex, or a quadplex, the borrower will have to occupy one of the units. And then, of course, condominiums are eligible for this. And I notice a lot of times there's a lot of need for renovation in condominiums because people don't seem to do a lot of updating and maintenance. Here in our Oklahoma City market, we have some wonderful condominiums downtown that are brand new, very modern, beautiful properties. And then we have a large market of a lot of older units that sometimes have been rentals, not very well taken care of. This is a great solution for a home buyer. At this point, we do not do any manufactured home under this program. You are able to do modular. Of course, it's great for HUD repos. And then the neighbor next door program, all of those are still eligible. Now, ineligible properties are going to be obviously investment. You cannot do an investment property, it has to be occupied. You cannot do a second home. If it's a 5-unit, if it was a recent flip, somebody's bought it and they've done a little bit of work and they're going to resell it again, we still have that same 90 days, so we have to remember that. These, again, guys, these are program guidelines that are across the board on FHA, not necessarily unique to just the renovation loan. Now, I always like to break this down for everybody, is that I want you to understand that there's 2 programs. There's the 203K standard, and then there's the limited. So these are the 2 different lanes, right? They're both under the 203K family, except for one is called the standard and one's called the limited. Most people associate the difference with the limited having the maximum cap of $35,000. That's what normally people are going to associate the limited with, but there's a lot more to go with that. So it's important to understand what the difference between those 2 programs are. Now, it's also, remember, for you as a realtor, we want you to be doing your part, and that's selling the home. Let us do the lending, because they may have questions you might not have the answers for. So we'll be doing the lending side. We'll have the answers for them. We will guide them and make sure that they're on the right program. But so we're going to cover these real quick. The 203K standard is going to be friendly to one unique thing, and that's going to be any sort of structural repairs. A lot of times I've heard out in the market people say, well, you can't do structural repairs on FHA loans. You can, you just need to make sure that you're doing that on the standard. So that's one thing you have to remember. You also, when you're doing a standard, you introduce the person that's going to be a HUD consultant. The HUD consultant is going to be the person that's going to draw up the paperwork. They're going to also be the one that's going to make sure that the property meets all the HUD requirements when the construction is completed. There's a cost associated with that, so when you're going down the standard lane, you got to remember that typically they're going to be a little bit larger projects. All right, and then the limited, this is why they call it the limited, right? So, hey, stop. We can only do 35,000. That's the limitation. That's where you're going to be stopped at. Now, there's some other limitations as well, and we'll go into those a little bit more in detail. Now, the things that you can do under the standard program is pretty big. You can do structural, right? You can do a garage, but it has to be attached or detached, which means you cannot do a barn, right? Can't do horse stables, things like that. You can build a garage, attached or detached, but you cannot do a barn or a workshop. That's a question we get a lot here in Oklahoma because a lot of people like to build workshops and barns and big storage units for all their fun stuff like boats and RVs and ATVs and stuff. So swimming pools, remember on swimming pools, it's important to understand that on a swimming pool, you can fix a swimming pool. You cannot install a swimming pool. So if you have one that the home inspector said, hey, things aren't working on this swimming pool, and you're going to do an FHA loan, you will have to make those repairs. So this is a great program for it. You can put in appliances. Remember, these appliances they're talking about, we're not talking about refrigerators, right, because that's personal property. Built-in stoves, range tops, oven, things of that nature. Of course, you can do all the other stuff listed here, roof, gutter, downspouts, windstorm shelter. So a lot of times here in Oklahoma, we have the question of can you install a shelter, right? So a tornado shelter. And this program is very friendly to all of that. Now, the things you cannot do, and I decided I needed to give people visuals on these. I made the joke that, typically on an FHA loan, you're probably not going to see this sort of stuff anyways, but no, you cannot do tennis courts, right? So you cannot buy your house and install a tennis court. You cannot do a pool that has a grotto on it. Of course, no bathhouses or anything like that. And if you wanted to do a photomural, you can't do that either. So you'll see no new swimming pools, no outdoor fire pits. That's really the rave. This is not the program for that. Now, the limited is a lot different. I always explain the limited as this. And to try to make it easy for people to understand, clients and of course also the real estate professional, is to understand that the limited is really designed for the purpose of just basic renovations. And it's going to be a lot of cosmetic stuff typically. I just want to make it look prettier. Maybe I need to meet some minimum property standard guidelines for some repairs. The limited is great for that. You can take something that's a little bit dated and you can turn around and make it fresh and new, right? Countertops, cabinets, carpet, things of that nature. They're very friendly to that. So this is a great program for renovations. Now, these are all the different types of eligible repairs that you might have on just a basic limited. So the basic limited can include all different types of things. Again, in this package, I put the minimum property standard guidelines for HUD, and pretty much all that stuff to bring the property compliant will be also on that list, as well as a bunch of other fun stuff. Now remember, you're going to see a lot of stuff like repair and replace and upgrade. You'll hear that term a lot: repair, replace, upgrade. So these are the type of things you're going to be dealing with. This is not the program to add a bedroom, right? If you're going to build that on the house, the limited is not the place to do that. That would actually be the standard. That's going to be the one where you're going to be able to make those bigger repairs. Because this, again, remember, the keyword limited is going to cap you at $35,000. This is kind of some basics that you cannot do on the program. So you're going to see major rehab, new construction. Obviously, we know that's not any sort of structural damage that's off the table. And anything that really has detailed designs, plans, and specs. And that's typically when you're going to be adding to a property, you're going to be building out a room, you're going to have plans and specs for that. This is not the program. Keep in mind, limited. If you just remember limited, that's going to help you remember that nothing fancy. Got to keep it simple. All right, so when you're doing this product, who can do it? The first thing that most people want to do is they want to be their own general contractor, right? They want to do the work. They want to participate in it. This particular loan program is not friendly to what we call self-help. Self-help is when I'm doing the work, right? I'm painting, I'm calling the person to come in and do the carpet repair. I'm going to call and have the person do the countertops. I'm basically going to serve as a general contractor. This program here, in fact, all the programs, none of them are friendly to self-help. Now, you may hear that there's kind of a gray area in there, and there is. Now, if you are a professional general contractor or a tradesman in electrical or plumbing or something like that, we'll talk about that individually because there is a space for that. But typically, you're going to need a general contractor. Now, you have to remember, depending on what state you're in, certain states have licensing for general contractors. Here in Oklahoma, we do not have individual license or a state license for general contractors. So with that being said, as a lender, we are going to do some vetting. So we're going to make sure that the general contractor that you have selected, because we don't have an approved list, you're going to select them. When you select that person, we're going to look for a couple things. We're going to want to make sure that they have the experience to do it. They have a good reputation, so we're going to ask for some references. And we want to make sure they have the financial capacity to do that. And some people ask me, why the financial capacity? Why is finances a concern? And it's important to understand that when you start a loan like this, right, a renovation loan, they're not getting all the money up front. So they're going to have enough funds and be in a financial position where they can facilitate the project financially. Maybe have to pay their subcontractors, pay for some materials, things like that, and they're not going to get all of it. So we want to make sure that they don't run out of money in the middle of the project. Now, this kind of list of different things, the great news is you just have to tell us who the general contractor is. We will take care of the part of getting them vetted. I always tell people we're going to make sure that we vet them for us and you. So, all right, so this is kind of a general wrap-up between those two programs. Like I said, there's a lot more details to this, but the idea of this video and this class is to make sure that you have the basic understanding of the FHA 203K standard and the basic of the limited. So you have to remember there is a difference, and some of the basic ones, of course, are going to be, in the standard lane. That's for a little bit bigger rehab project. You're going to have a $5,000 minimum. It's no self-help. You'll see that neither one of them can do that. It's typically going to have draws where they're going to have multiple draws as they're working through the project. You can actually, if the property is non-inhabitable where they cannot live in it, they can actually load some payments into it as well. So this is a great program for a bigger project. Now on this side over here, when you're dealing with the limited, you got number one, you got the cap of $35,000. That's the total loan amount cap, which means your project needs to be probably around $30,000 or less, because you're going to have a contingency that's going to be rolled in. I always say that's the what if that happened fund? That's the contingency, and you got to have that. It varies based on what type of project it is, and also, most importantly, whether or not utilities are on. And then the other thing you have to remember is, on this particular product here, it's 1 in 1. And what I mean by that is, they're going to get some money up front to start the project. That's going to be based on how much the materials costs are, not labor, just materials. And then they're going to do all the work, and at the end, they're going to get a final payout, right? That's going to complete the contract. So it's a seed money and then completion. So there's not multiple draws through that process. So this gives you kind of a general wrap-up between those two programs. So we're going to switch gears here, and we're going to take off our government hat for a minute, and we're going to start looking at the Fannie Mae Homestyle Renovation. What I like so much about this particular program is it offers some additional flexibility. So the first thing I always tell people when we're talking about renovation, I need to kind of have an idea of the type of property you're looking at, because the HUD loans have caps on loan amounts, right? You can only borrow so much money on an FHA loan, where you get much more flexibility under the conventional program. You have a little bit higher loan limit. So that's wonderful. Under the Homestyle Renovation, you have obviously all the different terms. You can do an investor up to 85%. So you get a little bit of extra flexibility there. This one here, you could take it down to the foundation. A lot more flexibility. This is one that I prefer. Of course, the other reason is I don't have to contend with a HUD consultant if it's a big project. They add an extra layer of complexity to the transaction. So these kind of break down some of the LTVs. As you can see, you can do owner-occupied, you can do multi-units, you can even do a second home. Then again, this is also friendly for condos. The credit score requirements are a little bit higher on these. On the credit score for both FHA and the conventional, you want to consult with the loan officer or the loan originator, because they'll give you more details on what the minimum credit scores are for the programs. This is things that you need to know. Of course, in this case, these both apply for both programs. You're going to have a 10% contingency added into the total renovation amount based on the project, right? So if the project is a $30,000 repair, if the utilities are on, they're going to add 10% to that as the what if fund. And then, of course, if utilities are off, it's going to be 15%. At this point, when you do this product, the conventional, like I said, you don't have to worry about the HUD consultant. There is a cost for that. That is not free. The client has to pay the HUD consultant as it's going through the process. And the HUD consultant will charge travel and things like that. So sometimes it can get a little expensive, not really friendly for smaller type projects. This one here is, of course, one that you can do multiple draws. So for a little bit bigger projects, the general contractor can be getting paid as they go through the process. So the Homestyle Renovation, much more flexible. This is the one where you might be doing some extra stuff. Again, you know, this is not the one where you're going to put in, you know, I would say, you know, if you're going to build a $200,000 barn on a $200,000 property, guys, this is still not the product for that. It still has limitations, but as far as flexibility, very flexible. I want to put this next slide that's in here is for you to have a better understanding of what a home renovation loan looks like when it becomes numbers. And you might not be able to see this, but I'm going to go ahead and tell you what this is. This here shows the $200,000 purchase up here. This right here. This shows that they're going to make $17,500 in repairs. This right here is the 10% contingency fee. And in this case, I can see one inspection and I can see one draw, which this right here tells me that it's a 203K limited because they're going to be doing just one inspection at the end. They're going to be doing one title update to make sure that there are no outstanding liens against the property other than the one that should be there, which hopefully will be moving mortgage, no mechanics liens or liens from any contractors. And then, of course, this right here. These transactions, they're not free, so you have to remember, in comparison to a normal FHA loan or in comparison to a normal conventional loan, there are going to be some additional fees. There'll be a small interest rate difference, but then you'll also see this right here. So in this case, $350 or 1.5% origination or fee, I say, that's going to be 1.5% of the improvements, not the total loan amount. So remember, that's of the improvements. So in this case, if the improvements were, I don't know, let's say 20,000, it would be 1.5% of that, or 350, whichever was greater. In this case, the 350 is greater. Now, the benefit to really doing this program, you have to remember, is that how much money does the person have to work with? Is it easier to come up with 3.5% or 3 or 5%, depending on what program you're going with, or is it easier to come up with a total amount in repairs? So in this case, you'll notice that your 3.5% down is 3.5% of all this stuff added up. So you take your renovations, you take your contingency, you take your draw and your inspection, and you take your fee, and then you add that to your loan amount, and it's only, in this case for FHA, your down payment is based on that total. Now you also have to remember that property still has to appraise. So I always get that question, how does the appraisal work? What happens? How do they do that? So it's very simple. Whenever you write the contract, you have the contract written, shows the terms of the contract, the purchase price, all those things. And then we're going to take along with that the bid. Now, depending on the program, there might be some plans and specs that go along with that. And those two items are what's going to go to the appraiser. And the appraiser is going to appraise it as it is completed, right? Subject to is sometimes the term you'll hear. That means the value is going to be based on after the renovations. And when that happens, you got to remember that we're going to finance the lesser of the two. So the cost of acquisition, which is your purchase price plus all the improvements that are allowed, right? Then also the appraised value. So whatever the lesser of the two is, that's the one that's going to be allowed to be financed. So this kind of breaks it down. I apologize if you can't see the details in it. Of course, call myself or Move Mortgage Loan Officer. We'd be happy to go over that with you. So I'm going to switch gears real quick. I'm going to split this over to the VA renovation. Now, this is fun here because this is a base we don't have to compete with very many people because not a lot of people even know the VA renovation is even a loan program. They know VA loans, but they didn't know there was a renovation path. So here we go. This is a great product, of course, because VA, what does it offer? 100% financing for qualified veterans. So this is what sets the program apart. Now, I will tell you, when it comes to what's eligible under this program, it's a little bit restrictive because it really focuses more on cosmetic stuff. I always tell people that, remember, this is what's going to make the property look nice and look pretty. A lot of times if it's major repairs, they are not going to be on that list. Now, here in Oklahoma, the one that we hear most common is structural, right? If there's some foundation issues, can you do this program? The answer is ineligible structural modifications, right? So in repairing structural issues, not available on this program. You're going to see one right here, one mold remediation. This slide does need to be updated. This is one thing they have changed. you can now do mold remediation on this program. But as you're going to see, if it's a big project, it's not for this program. Mostly repairs, cosmetic stuff, very friendly to that. You are limited to $35,000 on this program as well. That may be changing in the future, but at this point right now, 35 is your cap. All right, so if you have any of these right here, we would love to talk about renovation loans, and we would love to hear your questions. You can always reach out to myself. Again, my name is David Dustmann with Move and Mortgage. My number is right over here. You probably can't see that now, it's too far out there, but this is my number right here. I am licensed in the state of Oklahoma, so I can answer all your Oklahoma needs, and I'd be happy to do that for you. This, of course, is our wonderful disclosure. Probably a little small to read, but here you go. And then last but not least, here we are, find ourselves at the beginning again. So I wanted to thank you for your time. I know this is a lengthy video, but it's really important for you to have this information. Again, this is another tool in your tool belt that you can use in order to list and sell more real estate and have the biggest year ever. So I'm wishing you much success this year, and may you sell many homes and have many happy customers. Thank you. Have a great day. Bye-bye.